Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, CEO Justin Schreibert from LifeMD. LifeMD is building the leading platform for comprehensive virtual healthcare or telecare, end-to-end compliance first platform for direct-to-consumer virtual primary care. Early mover advantage and partnership strategy create a deep competitive moat. Affiliated 50 state medical group anchored by full-time providers who provide industry-leading comprehensive virtual care. This is a impact company for sure. And for those that don't have health insurance, this could be a good alternative to consider. A lot of times you don't have to go into the doctor to have someone take care of you. And I'm going to let Justin tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a follow-up in a much shorter time frame than the last time I met with Justin. Because Justin, how are you, man? Thanks. Justin Schreiber from LifeMD, ticker symbol LFMD.
It's great to be back, Tim. Thank you. This is my I used to tell people that the All In was my favorite podcast, but I think this is definitely my favorite podcast now in America.
So listen,
Pleasure to be here.
you had a great move, right? It really looked like the stock was breaking out. And then I don't know what the hell is going on. Maybe some misunderstandings with it or confusion within the markets. But how are you feeling about where LifeMD is right now?
I have never felt better about where LifeMD is. I mean, I think there's a lot of confusion right now, Tim, in the markets over, what's going to happen with these compounded GLP-1 therapies. I guess a couple points just to make to your listeners on the GLP-1 thing. If compounding goes away tomorrow, it's probably a very good thing for LifeMD. GLP-1s are not going away anytime soon. LifeMD is seeing incredible, one of the big differentiators between us and HIMSS is we're helping patients use their pharmacy benefits to get coverage for these drugs. I'll share with you a number hot off the press from this morning. 70% of patients that provide, so if we have 100 patients, give us their insurance information. 10% of them are going to get approved for a branded GLP-1 therapy, one of Lilly or Novo's drugs, off the bat without any prior auth. Here's a big number that I love. 70% of those patients that don't get approved off the bat are going to get a prior auth needed. LifeMD has done such a great job at optimizing our processes and our workflows for helping patients get prior auths approved. We're now getting 70% of those prior auths that we file, mostly for Zepbound, approved for patients. That's incredible. That number's up from 20, 30% a couple of months ago. And by the way, it's going to keep going higher. Secondly, this morning, Lilly announced that they're reducing the price of their first two, their vials, which are their cash pay medication for patients that don't have insurance. They lowered it to $349. I think it was closer to $500 previously. It was a big drop in price. So that makes the actual branded tirzepatide Zepbound products very competitive with compounds. So bottom line, we help patients use their insurance at LifeMD to access GLP-1 drugs. We're better than I think anybody at doing this in the virtual world. And the percentage of patients on branded therapies with LifeMD is going through the roof. Another quick point, I think you're going to have some sort of compounded route or some sort of a route to access compounded GLP-1 therapies until there is a global solution, right? Until you have Medicare coverage. until you have, a majority of employers willing to cover these drugs, you're going to have a compounded solution. LifeMD doesn't, we don't make these drugs. I'm in my pharmacy today, actually. I'm working from here. We could very easily make a little bit to a lot more money if we were to bring compounded GLP-1s into our pharmacy. We don't make them. We don't ship them out of here. We are a healthcare provider. Once, if only if patients can't get approved for branded therapies, do we then send a script to a compounded pharmacy for our patients. The last point I'll make, actually, I have two more points if you'll allow me, and then I'll stop talking.
Absolutely.
The last point I'll make is we also have a non-GLP-1 oral weight loss offering that we call our triple therapy. It's three different generic drugs. We're likely going to be compounding that into one drug. It's included in the cost of care for patients. So if you come to LifeMD and you don't have insurance coverage, you don't want to go down the compounded route, we actually have a therapy that's pretty efficacious. I mean, we're looking at some of the, it's still a small business for us, but we're looking at some of the early data. It looks over the first 30 days to 60 days of use, the efficacy of our generic drug offering for weight loss is very similar to semaglutide. And the safety profile is certainly not worse, or the side effect profile. So I think that's really compelling, and I think that will also grow. And the last point is, LifeMD is not a weight loss company. One of the reasons you reached out was because we mentioned this week that we launched our behavioral health offering. We're a platform for virtual healthcare. We do men's health. We do women's. We're going to be launching. We've already done a lot of women's health. We're going to be launching a formal women's health program. It's going to be incredible in the first half of this year. As you saw, we hired Julian Cohen, who was show me a bigger guy in the virtual behavioral health world. Ran United's behavioral health business. Ran Cigna's. Every company he's ever built has been sold. Managed tens of thousands of providers. First guy at HIMSS to build their behavioral health program. He's an absolute legend. And I mean, there is a whole portfolio of offerings that we can launch in the behavioral health space as well that we're going to launch. So I think that's the takeaway. I mean, the stock can go up and down because of FDA removing semaglutide from the shortage list. That's fake news, Tim. I know that's a word you like. Fake news. Every single sophisticated investor knew that semaglutide was coming off the shortage list. We'll see what happens. The bottom line is these drugs are very, very efficacious, right? We need these drugs as a society. They are doing incredible things for patients, not just around their metabolic health, like you and I were talking about, in neurological health and addiction. There's lots of areas, right? These drugs are not going away. And we have a platform that, however they're accessed, we will be a leader. And likely it's not going to be for the next couple of years, it's going to be for the next couple of decades. So back to you. I'm sorry to take up so much time when
No,
you're
no. I love it, and I love how passionate you are about it. And we, look, we talked a little bit before we hopped on. You make a very important distinction that I don't think a lot of people get. But you are not a lifestyle company. That's not what you are. You're an actual real medical uh, provider for real patients, right? I mean, this is not just a lifestyle company.
We're going to talk more about this on our earnings call, March 11th, but 100%, right? And by the way, Hims is a great business. They've done an amazing job. They have a very focused strategy, which I think investors appreciate. LifeMD strategy is different. I mean, we do have those lifestyle telehealth offerings inside of our business, but we also have made massive investments in building an incredible platform for virtual primary care, which includes, video visits for most of our patients have video visits with their providers. As I said, we help patients use their pharmacy benefits, insurance, medical insurance. It is a big differentiator between our offering, our business and a lot of the other, big, more lifestyle-ish telehealth companies that people tend to compare us to.
One thing that's become, the more you and I talk, the one thing that's become very apparent to me is that you have your finger on the pulse of a lot of stuff that's going on in pharma, and you are really on top of a lot of stuff that I don't think a lot of people would even be looking at, really. So I think that's probably a huge differentiator for this company because you are, and I'm talking, I know you're not a doctor, but you sure, maybe you stayed at a Holiday Inn last night. I don't know. You play one really well.
I'm definitely not a doctor, and please don't anybody misconstrue this as medical advice. But look, I'll take the compliment. I mean, I've worked around a lot of doctors now for a lot of years.
Yeah,
Um, look, all we what we've focused on doing is one, building something where we could deliver amazing healthcare. We learned early on in at LifeMD that like the async model, the outsourced doctor model, the stuff doesn't work. Like you can't deliver good care. You have to do it yourself, right? So we built this amazing medical group. And then like after that, like, we have to obviously, if you want this business to be sustainable, you have to drive unit economics, right? You have to have a way to acquire patients at the right price, have strong retention, have great product offerings, drive real outcomes for patients. And that's what we focus on doing. And then lastly, it's diversification, right? Like, can't have one offering. Can't just be a weight loss platform. You can't just be a behavioral health platform. You can't just be a, men's sexual health platform. Like, we really have, from day one, we've like built the tech, built the team, and the vision has always been to diversify. It's taken us, I think one of the knocks on LifeMD is that like even going into this year, like, we're not as diversified as Hims, right? We're not as diversified as Row. And there's a reason for that. We didn't have the balance sheet. But you know what? We have we have a rock solid balance sheet. We're profitable. And now we've gotten the tech to a point where we can diversify. Like now we can stand these other offerings up in, 60, 90 days and we can do it right. Whereas if we would have tried to do this a year ago, it wouldn't have worked, right? We would have lost focus on growing and building a profitable business and like delivering great care to for instance, our other patients. So we had to be focused, but now we have the ability to really branch out and launch more of these offerings and execute on them.
yeah. I think so one of the things I look for in companies and CEOs is looking the vision, right? Of kind of being able to see where things are going before other people recognize it, right? And I think I know for a fact that you and I have had a couple of conversations where your vision of the future for healthcare is, I mean, I believe that is where it's going, but I don't think a lot of people are thinking that that is where it's going, if that makes sense.
Yeah, I mean that's an interesting point. There aren't many. I think a lot of people believe that in this whole like consumerization of healthcare movement, um, I just think people are unsure of who the winners are going to be. And so I think over the next couple of years, I think you're going to see some consolidation in the space. I think you're going to see consolidation even among the top 5 or 10 players. And, Hims is clearly kind of the leader, especially in the more lifestyle telehealth side. But hey, my vision, Tim, is that, a lot of people tend to knock the lifestyle side of the business. But, I think it's going to be the more like kind of lifestyle-ish companies like LifeMD and Hims and Row that, ultimately build this massive database of patients. And over time, you're going to see these companies like, kind of slowly expand their offerings beyond lifestyle into other chronic conditions, into primary care, into preventative care and, and diagnostics. And then I think everybody's going to realize, oh, wow, like we kind of disrespected these companies. We said they weren't really healthcare, but actually we forgot to think about the patient acquisition side of the business. And oh, just because like this company wasn't B2B and they didn't have Google or FedEx as a client, they actually went out and got 100 times or 1,000 times the number of patients through these really creative, like innovative, like direct marketing types of strategies. And they delivered real products and services to these patients that they really needed that actually drove outcomes in their health. And now these patients trust these companies and oh, wow, now they're doing all these other chronic conditions, right? And I think long term, like these companies, the LifeMDs, the Hims, the Rows of the world are going to be the ones that that we're going to be the biggest, we're going to be the biggest providers in the country.
I
We already are some of the biggest providers, but we're going to just like you're going to see more and more diversification. You're going to see payers come to the table. You're already seeing that.
the ease and convenience in which you are going to provide those services. I just think of I'll give you a really good example of who I think of when I'm talking to you. Blockbuster and Netflix, right?
Hmm.
I mean, Blockbuster had one of those huge ass stores on just about every freaking corner, right? Who would have thought that a company that's mailing out discs would be where they are today, right? And because Blockbuster thought they were the convenient one. They really weren't. I hated going to that stinking store, right? You get there when the new movie comes out. Well, the new movie's already gone because everybody's picked it up already. So then you got to figure out, you got to pick some other crappy movie to take home because I'm there. And then Netflix does their thing, and it's like, you mean I can just hold on to this for as long as I want and send it back, no problem, no late fees, no nothing? Baby, we got something going here, right?
Yeah.
Same thing in a way, right? Because it's much easier to just do a telehealth than get in the car or schedule an appointment, number one, right? If they can fit you in, and then to get in the car, go over there, wait in the waiting room. The convenience of what you offer is just so much better, right?
Yeah, and it's look, it's a lot more than it's a lot more than just like the telehealth visit, right? Because that's fairly easy to do. What I think is actually where it gets a lot more compelling is when you combine the in-home diagnostic product, right? So you now have your labs. And guess what? Your labs are flowing into a platform where you actually can receive an AI explanation of what your values mean that maybe aren't critical but are a little bit off, which, by the way, try to call your doctor or your nurse practitioner about your lab work. So if something's abnormal, but you're not dying, no one's going to return your call. So it's like bringing in all the labs. It's combining, data probably that's coming from wearables. It's thinking about supplements and diet, and it's, the whole wellness component is going to be a big part. It's understanding like what medications you should be on. It's having access to a doctor if you have obviously depending on what conditions you have, like there are lots of other, big benefits of this, but like that's where it gets more a lot, I think a lot more compelling is in this integrative approach where you have all of this prevention and wellness and the clinician and the pharmacy all in one place.
Yep. No, I mean that's actually it's taking it to the next level, right? So you're not just convenience, it's all of these other things. And once you've built that reputation of having good quality service, it's easier for you to make those transitions into these other things, right? Makes
Yep.
total sense. The market doesn't get you, but that's okay. I they're gonna get you eventually, right?
Yeah, I mean, look, I don't think it's fair to say that the market doesn't get us. Obviously I have a perspective on where the stock should be trading that I'm not allowed to talk about.
Right.
Um, but look, I think the stock's been volatile, right? But I would still say what I'm most proud about, like go to Yahoo Finance. They now put these beautiful things. Pull up LifeMD's page and look at the bottom of like the 1 year, the 2 year, the 3 year, the 5 year performance. I mean, look, we've crushed it for our shareholders. You know what I mean? And my goal is to do the same thing over the next 5 years, right? I mean, I think there's no reason why this we shouldn't see the same performance. I think it's close to 1,000. It's like 500 to 1,000% return. I mean, that's what I think we should be able to do over the next 5 years. Forward-looking statement, disclosure, go read it on the website. But I'm serious. I mean, I'm serious. Why else would we be running this, right? I mean, I'm not promising those returns, but
Right.
but if we execute on the business, I mean, you should, there's a really, really clear potential 10x return if we execute.
Right.
This market is massive. Like we were talking about earlier, it's not a weight loss company. You have so many markets here that are so large.
I love the
Uh,
behavioral health announcement. I thought that was a big deal, right? I mean, I see that as a big deal. I mean, look at the mental issues that are, I mean, there's a lot of bad things that are happening. The trends are not good. Let's just put it that
Mhm.
way, right? So I
Yep.
think that that is a huge thing for you to get involved in,
Yep.
right?
Yep. So do we. I mean, you have to have it if you're going to run a comprehensive primary care business. So
Right. So there's no fires that are happening right now. You're feeling pretty good. You look calm. I mean, you look relaxed to me. I mean, you don't look like you're stressed at all. I mean, you're excited. That's what I love about. If anybody's not feeling your passion and energy, they need to go see get. They should probably get a checkup to make sure they're fit.
well, I'm glad I come across that way. I mean, we've been through the stock volatility. LifeMD's always been a volatile stock. And I think it's like it still affects me. Nothing. It does put a little bit of a damper on my mood, obviously, when I wake up on days like today and I see this kind of volatility, only because let's face it, a large chunk of this company is my friends that own this thing, right? So even if
It's
I'm
like
not stressed,
it's like your kid, right? I
that's
mean,
like my baby. And I know all my friends are stressed, and a lot of our shareholders, and like so that doesn't make me feel good. But at the end of the day, again, like our track record speaks for itself. We've built this thing from a $5 million market cap. We've always done, we've financed it properly, we've minimized dilution, we now have a strong balance sheet. We still have this work simply asset to divest, which I'm very optimistic on. And
oh, right, and that's right. That's still a thing that's sitting out there, right? That you
yeah,
can
it's still
literally.
sitting out there. I still feel pretty good about, it's return, it's performing, it's great top and bottom line, revenue. And but look, we're in a good position, Tim, and I'm not I went through my days of stress at LifeMD. I'm not there anymore. I'm super excited about the business. And I hope that everybody else that's a shareholder is just as excited as I am.
So look, I think I do want to show the chart for a second because I do believe it's at a very interesting spot. And I'm not telling anybody what to do. I don't tell people when to buy or when to sell, but I will say that from a technical standpoint, the stock is in a very interesting area right now this morning. As a matter of fact, I probably, this is me, I'm probably going to add to my position today. Right? At least that's what I'm thinking I'm going to do. Because it's sitting at this $5 area is kind of a big spot. It's kind of a big spot. And there is really, I mean, you had a big volume day. Was there anything on that day that came out that would have justified the price action in the stock?
Well, I think the big volume day was the reason in the last couple of days was when FDA removed semaglutide from the shortage list.
Okay.
So,
Okay.
look, Tim, it's, well, again, look, a lot of people out there believe that, that compounded GLP-1s are going to go away very soon and that it's a death sentence for LifeMD. I don't understand that logic. I think it's wrong. But it's a retail trade in my opinion, right? And I don't mean any disrespect to it, but it's a lot of people are trading this. They're just traders. They don't understand
Right.
the story, right?
They're not investing. And
Not
here,
investing. It's yeah, I shouldn't use I'm just saying it's a trade. It's just a stock to trade, right? People and it's highly correlated to HIMSS and these moves happen and it hits LifeMD stock.
well, this is a very interesting support area, is all I'm going to say from a technical standpoint. It's already had this waterfall move, which I think is way over exaggerated. There's so many positive things happening at this company that if you're going to let this one little headline, I mean, you're just not getting the whole story. You don't understand the whole story, right? So I think when people don't understand the whole story, that creates opportunity. That's my belief. Look, if it broke this $5 area and it went lower, what would I do? I would buy more because I'm not thinking that you're on your way out of business. I'm thinking that if I just talked to you, I feel your energy and I see where you see things going, And I agree with you. And I think you're ahead of the curve of probably a good chunk of the industry, right? I mean, you have a very clear, concise vision. And I see that vision as making a lot of sense. To me, it's common sense, right? Maybe not to everybody else. Maybe it's not common sense to them, but it is common sense to me. And I like to bet on the jockey. The horse is good too, but I really like to bet on the jockey that's got a clear vision, right? So I have no qualms about this is a gift. I look at this kind of a price action. This is a very dramatic and what appears to be an emotional response. That's not how you make big money. You don't make big money reacting emotionally, right? You use other people's emotions to strategically build your position. That's what you do. And this is one of those times, and that's why I wanted to get you, in my view, is one of those times. And that's why I wanted you to come back on. Plus, you had the behavioral health news, which I thought was another positive. And I thought this is an underappreciated story. And this is a gift. This is an opportunity. If you have no shares, I can say this confidently. Buy one share. Buy one share of the stock just so that you actually have it and you pay attention to it. You don't forget about it, right? It's your phone. If you do that, I guarantee you, well, I'm not going to guarantee you anything. I think you will be happy in a year from now. If you look at where that, you'll probably be happy for a second and then you'll be really pissed off that you didn't buy more. That's probably what happened. Justin, I want to thank you, man, for taking the time. I know you're busy as hell, but I think your story is a very underappreciated story. And this is a big healthcare is not going away. Telehealth is not going away, right? It's here to stay.
Yep.
So, and I think you've got a lot of runway ahead of you. So that's just my personal opinion. Right here at this level, and the reason I say it is because why? It has acted as support, it's acted as resistance. This area that it's in right now, if you look to the left, it's been actually at a support and resistance area, a little battleground. If it goes lower, where could it go? I mean, it went down to 488 or whatever. Okay, I'm buying more at 490 probably. That's just how I see it, right? This is a good strong company. You got a CEO that's not afraid to come on and and talk when things maybe don't look so perfect, right? Transparent guy. That's my take. All right.
Thanks,
So
Tim. Appreciate what you do. It's always a pleasure to be here. We have earnings are in 2 weeks, so we should come back. We should do a follow-up after earnings, maybe.
that sounds like a great plan. Let's do that. Okay. Uh, thank you, Justin. Thank you for doing this, and we'll be back in 2 weeks, right, with an update.
Sounds great. Sounds great.
All right, man. Hold on one second.
Thank you for joining us for another CEO interview here at Alpha Wolf Capital today. We had Justin Schreibert from LifeMD. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.